Is iron condor trading good for consistent income? The honest answer is yes, but not in the way most people think. Yes, iron condors can bring in regular premium. No, they are not a paycheck. They are not an ATM. They are not some magical options machine where you press a button and money falls into your account every month. That's not what this is. What an iron condor really does is pay you up front for taking on risk. Defined risk, yes, but still risk. And that's the part people gloss over. I want you to think about iron condors like an insurance business. You collect a lot of small premium payments, and that feels great. But every once in a while, you get a loss, and that one loss can wipe out several winners if you're not careful. That's the reality. Now, I get why people love iron condors. They're defined risk, and they put premium in your account right away. And when a stock just sits there and behaves, iron condors can work really well. But let's use a real example with CVX. Chevron is trading around 191.30, and we're looking at the June 18th expiration, 66 days out. Here's a sample iron condor. On the call side, you sell the 200 call at 5.83 and buy the 210 call at 3.05. And that gives you a 2.78 credit on the call spread. And on the put side, you sell the 180 put at 4.68 and buy the 170 put at 2.56. That gives you a 2.12 credit on the put spread. Put both sides together and the total credit is 4.90 or $490 per condor. Now you can see why people like these trades. Money hits your account right away. But now let's talk about what actually matters. Each side is 10 points wide. So the maximum value of either spread is $1,000. Since you collected $490, your max profit is $490 and your max loss is $510. So that's the real trade. Best case, you make $490. Worst case, you lose $510. Your short strikes are 180 and 200. So your ideal range is right there between those levels. Your break-evens are 175.10 on the downside and 204.90 on the upside. So what you're really saying is, I think CVX stays between 175.10 and 204.90 over the next 66 days. That's the trade. And in a calm, range-bound market, that can be a perfectly reasonable trade. But this is where people confuse a high win rate with a safe strategy. Those are not the same thing. Let's say CVX closes at 203 at expiration. You're still profitable. You'd make about $190. But if CVX closes at 208, now you're looking at about a $310 loss. And if CVX closes above 210, your loss is maxed out at $510. Same thing on the downside. If CVX closes at 177, you still make around $190. If it drops to 172, now you're down about $310. And below 170, you hit the full $510 max loss. That's why iron condors work best when markets are flat, quiet, and boring. And that's why they struggle when the market starts moving. A big directional move, a spike in volatility, an oil headline, some geopolitical shock, sector rotation. All of a sudden, Chevron is no longer sitting in a nice little range. It's moving. And when it moves, iron condors can go from steady income to problem trade real fast. So no, these are not passive. You can't just throw on an iron condor trade and forget about them. The trade needs to be monitored and the risk understood. And you need to know what you'll do before the trade goes against you. Now here's the bigger lesson. Beginners focus on the premium. They say, great, I can make $490. Pros focus on the risk. They say, okay, I can make $490, but I'm risking $510 and I need CVX to stay inside a pretty specific range for 66 days. Am I being paid enough for that? Because once you start thinking that way, you stop chasing premium and start trading intelligently. And trading smart matters, because the biggest mistake beginners make is they get a few easy winners, then they get comfortable, then they size up, and then one bad trade hits them harder than they expected. Defined risk is good, but defined risk does not mean harmless. A few bad condors in the wrong market can do real damage. So, is iron condor trading good for consistent income? It can be part of an income strategy. Absolutely. But only if you have realistic expectations, disciplined risk control, and you understand that the income is not going to be smooth. Some months will be good, some will be flat, some will be ugly. That's trading. Now, if you want to see some other ways to make money with options, click the link below and download my free report. If you want the complete breakdown, download our free options report below. Everything discussed here is our opinion and is not to be taken as investment advice, nor have we considered your personal situation as your fiduciary. This presentation is for education and entertainment only. Please review NetPick's full risk disclaimer and privacy policy.